The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And good afternoon, traders and traderettes all over the globe. This is David White and the Power Trading Hour at the headquarters of Technical Trading and Investing, TFNN.com, coming to you live from the mega center of trading, Clearwater, Florida. We all know that it's Clearwater, Florida is the mega trading center, don't we? Yeah, I hope. Anyway, I hope everybody's having a good day. We are hoping that everybody in Boston gets their lives back to normal as soon as possible. In the meantime, trading and the market continues on as we look out here. Not a big surprise. This market, since last Thursday, when I said it had a 96% chance of expiring at 1555 plus or minus 10 points, we may even get within 5 points on this thing. Looks like they want to pin it right at 1550. Probably looking at some other stocks out there like Apple. Looks like they're going to try to pin this thing at 395 at the close. Of course, it is options expiration. We've got a few stocks moving. Google up 3.5%. The earnings came in basically in line. A lot of people were a little worried about it because of what Yahoo had actually said about declining revenues and rates. Google's basically saying that it's not getting any better, but at least it's not as bad as it is over at Yahoo. So a little pop in there. Probably the real surprise is that IBM is having its issues today off almost $17, 16.88, 8.25%, something like that. We've been talking about IBM being the false breakout for a long time. Let's in fact bring that chart up right now to IBM. What we've been looking at is this 12.15 high that had gone in here. Is that right? 6 month day. Okay. That broke above the previous 208 high, the January 3rd, 23rd high, 208.58, had 12 million shares, broke above it, and on that day, what do we have for volume out here? You had 5 million shares, and he had almost 8 million shares, but it was light compared to that 208. Now, if we go back a little further on this thing, I think is what we were looking at a little long term, you can see kind of a triple top, and that we actually did have higher volume than the absolute peak out here. And one of the things that I use is the thing called average volume, and that means it's average by period. That's not what I'm looking for actually out there. I'm looking for max volume, and that is the maximum volume within 0.5% of the high. So we had 3 succeeding higher highs in IBM. The April 3rd high at 210.69, the October 5th high 211.79, and then we got to 215. And each one had slightly higher volume. What was interesting is once we closed back below that 211.79 and the 210.69, there was something really rotten in Denmark. So what do we have? A huge consolidation pattern, and the resolution out here is a blowout to the downside. But we've been kind of warning on it. You need a sign of strength, and you need some kind of signal after a stock breaks out that says, hey, I'm more than a one-trick pony, that we're going to have more than a couple of days out here in running, and a nice move to the downside. And what do we got? 210 to is that right? Yeah, 210 to 189.75 is the low today. So we'll see how that's going on. Of course, it is options expiration. Not uncommon to see a lower volumes on this day. Sometimes you see high volumes if they haven't gotten enough out of it. But volume at least decent today, 2.3 billion shares as we start the show at 2:11 Eastern Time. 1553 on the S&P cash. I suspect we'll probably see a little selling kind of at the end of the day. And bring this thing back to 1550, but not a big deal. We're going to have options rollover on Monday and Tuesday. During those days, you'll see advanced volatility, and that means they're going to try to shove it up, and then they're going to try to shove it down. And in the meantime, they're going to try to get some of the positions that they had for equity positions off that were covering some of these option positions. And at the same time, they're going to be trying to put on new positions for May and beyond. So just don't think that we're going to see the end of volatility today. And we probably got 1 or 2 days, normally by noonish, 2 o'clock on Tuesday. They're normally done with the options games and options rollover, and you start seeing the true path of least resistance in the marketplace. So keep a very close eye on that. I am expecting that we'll probably by late Tuesday or Wednesday we start our next leg down, and I'm looking for probably about 1475 in the S&P cash. Again, you can always give me a call at 877-927-6648, 877-927-6648. I'd love to hear your phone calls today. It's going to probably be a quiet day. All the news outlets are focusing on Boston, and in the meantime, we need to be attending to our knitting. I've got a lot of charts to go through today, so we'll be doing some of that. Not a lot of news, of course. A big thing like today swallows up a lot of what you really need to know. Most interesting is that the UK was downgraded not too long ago, a couple hours ago. And in seeing that, we what do we want? Yeah, probably not a huge reaction in this market so far, but interesting nonetheless. Anyway, I wanted to get to some of these other charts. I'm just trying to see if there's anything else. Oh, I know what I wanted to do. Hang on just a second. I wanted to get the movers in the NASDAQ and see if we have anything really moving out here right at the moment that I missed earlier in the day. ISRG, I wanted to talk about that one too. ISRG. Intuitive Surgical came out with their earnings. Again, I've been talking about this one as a victim of headline risk and what you could do. I didn't go through the earnings on this thing. It's kind of volatile. What I would warn everybody about is even CNBC is in on the action. They have a video talking about Intuitive Surgical, and you'd think that these doctors were a bunch of clowns with scalpels wildly waving them around in the air with the Intuitive Surgical's robots at the wheel. But a lot of times it's, especially if you're a personal injury attorney, it pays to go around and get this kind of fever drummed up about surgeries that have gone wrong. The question is not did they go wrong, but did they go wrong because of the hardware that Intuitive Surgical sells. Their robotic surgeon device called, what is it, Magellan? I'll think of it in a minute. $1.5 million a piece. And right now we continue to see the Obama administration and the government in whole looking for ways to cut huge items out of the medical bill. We now know because of actuarial tables just how big trouble that Obamacare is in. And that a lot of the promises are going to fail, not even just sort of short, but ludicrously short. Some states will see increases in premiums come the first of next year if nothing's done of 80% in several states, 4 or 5 states. So we're looking at huge changes out here. Intuitive Surgical needs to come down here and test this low. It's actually, chart-wise, not bad, 455.18. But I would, if you're going to trade this thing, I would go out and watch the I'm almost going to call it a hit piece on CNBC. But if you just search CNBC for Intuitive Surgical, you'll see they have a few-minute thing where they're interviewing some gal where her surgery went wrong. And, of course, Intuitive Surgical, big stock price, big, deep pockets. And guess what happens if you're a personal injury attorney? Do you go after the doctor, or do you go after a big, fat company like Intuitive Surgical? I don't suspect, because what I've seen out here, that there's much to their lawsuit, but they're going to throw some mud anyway at the issue. Dell's off at 52 cents. Didn't get really a chance to check on this, but I suspect it's more about general market conditions than Icon running around. McDonald's off 2%, back under $100, 99.86 cents. I think is there anything else out. You know, on an options expiration day, it is a rather odd to have a huge movement. We did have one, and that's Vertex Pharmaceuticals, up almost 60%. Again, pharmaceuticals are, this could have been down 60% also if they hadn't been approved for one of their new drug delivery systems out there. Google, again, up 4%. In fact, Steve Rhodes was talking to me. Let's see here. Steve Rhodes was talking. Yeah, the Da Vinci system. Thank you, Joe, in the den. Was talking to Steve Rhodes. He was asking me just before he went on his show where Google wanted to expire out here, and it's pretty funny because the options were pointing exactly correct this time, and that was that Google was going to expire somewhere around $800. My guess is they pinned this thing also to the penny at the close of the day. Microsoft up a little bit, as I think a little short squeeze is coming on Microsoft. Everybody was expecting, with the news of PC sales being down, that they would also be down. They continue to do well, especially with their licensing systems. They cut the price to get a few more out the door into this quarter. I suspect it's going to hurt them a little bit in the future, but still not too bad. Wynn Resorts up about 3%. Let's I want to take a look at that real quick. And this is one that's been bouncing around this gap down resistance level where the wheels basically started to fall off. It's pretty much come back up here. This thing did exactly what you should do, which is come back into that gap, pull back, come up. Volume is light today. If this thing came back into the 129.39 area and the volume was again light, probably a good time to say that you might possibly pull the trigger on Wynn Resorts. To Amgen, MCP, MU. What do we see? We're going to go to some other stocks here in a few minutes. We've got people, I guess, in the den here, locked in their houses in Boston. And thank you, Mr. Chapman Wave, and everybody else in the den today, keeping everything active.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I'd like to thank Steve, the probably slightly injured, dropped on his head engineer that we have in there today. He has his funny golf cap back on today. I haven't seen how he's dressed. I came in here so late, didn't have a chance to check out. Oh, just a Volvo T-shirt. He's a Volvo driver. He's one of those, don't you know? So anyway, it looks like we've got a market here that's probably just going to kind of flag around here for a while. 1553, 2.4 billion shares as we close out this day. Again, I don't put a lot in individual movements in stocks during expiration, but a lot of times they can be pushed to levels that are advantageous to go ahead and put on a position. If you get one that's really pushed up to hit some point, then you can. Sometimes it's really good to, especially when they push these things up on a short squeeze to try to get it up to a level. It's not bad to put a short on, and sometimes when they push it down, not a bad time to put on a long position for a one-day bounce back in come Monday and Tuesday. But look for, I would probably almost call it noise on Monday and early Tuesday. And I suspect we have the one, the only Basil on the phone. He's going to call us in from Ground Zero and talk about stocks. How you doing today, Basil?
Hi, Dave. How are you?
Pretty good. I read you were well cocooned, so you have lots of chips and dip and soda and everything ready to go there, huh?
Well, that would imply that we were expecting to be homebound, but we weren't. Yeah.
No, we weren't. Basil, you what?
It's a tragic situation, and hopefully it will be resolved one way or the other. But what I wanted to ask you about is this: the technique that you have. Do you find that if you're getting say a cluster of a certain group that are propelled, let's just say, to the upside as you're looking at, say, a Coca-Cola, say, all the defensive area, and that would be the Coca-Colas, Kellogg's, etc., Pepsi. Are you finding that you're getting that extension to what could be some kind of strong resistance point, a resistance point in a cluster? In other words, if you find, I remember calling in a long time ago when Ken Shreve used to be at IBD, and no, what happened is I interviewed him because Tom wasn't here, and I asked him the question. I said, in IBD, when you find that all of a sudden out of your top, say, 20 stocks, you've got 7 or 9 of them that are in a sector like the oil sector at one point, or in the housing sector. Is that telling you, what kind of a story is it telling you? What's the history of that occurring? And my question here is, would you be seeing the same sort of thing in the stocks like General Mills, Kellogg's, Pepsi, Coke, in the food area?
I think, yes, when you actually say, are we seeing a bubble in that area caused by easy money in the Fed, I think the answer is absolutely yes. I think this is I'm going to call it the Bernanke bubble. When you can, all you have to do is watch the infotainment TV and see the ad from my broker, one of my brokers anyway, about lending money at 2%. With stocks that have 4 and 5% yields on their dividends. It's just insane to not think that that's going to cause exactly the problem that you don't want to have, which is boom-bust cycles caused by the easy money policies that are out there. And I think a lot of people are buying these companies thinking that there won't be a huge surprise out of them, that there will be time to get out, right? That these are safe stocks. And we know, just like what we've seen in gold, there is no safe investment.
Right. So here's my question to you then. It's a two-part question. In the looking at your charts, and now most of the charts that you use, when you're using your technique of essentially assessing the volume, and in this case you'd be looking at the lack of volume as it gets close to a top. To the first part of the question is, what you think would precipitate a really sharp turn down in that kind of sector? That's the food sector, and here's the music. And the other question is, do you do that on weekly and monthly?
I'll answer those questions when we come back, if you want to hang on.
I certainly will.
Good. We've got the one, the only Basil. He's a liger, a tiger, and a lion in one. So we'll be back with Basil.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Baby, let me be your little teddy bear. Put a chain around my neck and lead me anywhere. Let me be, let him be your teddy bear.
And we're back, and hopefully we still have Basil on the line.
You certainly do.
Okay, so we were asking, what do I think is going to happen? I think that the interest rates are going to go up just a smidge, and that's going to be enough to frighten a lot of people out of these so-called safe stocks.
So the question then, I want you to focus on the food stocks. Do you think that it would be an overall market pullback that drags them down, or something specific in the area that of foods, like grains or something like that?
I think we've seen the Germany and the UK debt downgrade, and I think we're probably going to see ours downgraded. I think that we're set up for that, and I think we're probably going to see a surprise in China that's going to scare a lot of people also. I just think that there's probably a lot of skeletons in the closet over there in their financials that are probably going to come along. We've seen some of their stocks kind of blow up over there. They've got a very funky kind of investment scheme with nobody actually checking on where the money's actually going. A lot of those things are already starting to pop up. So I think we've got a lot of things that could precipitate it, but I suspect we're going to see two things. We're going to see interest rates a little higher as debt gets downgraded in the United States as we fail to work through balancing the budget, and problems in China. We know that Europe's already in a recession, and China's not growing enough to bail it out. So I think that that would be my broad interpretation out here. And I'm not much a big fan of him, but what's his name? Joe, the guy that called the '87 crash.
Granville?
Yeah, Joe Granville. Yeah, he has a couple of things that are interesting. Like a stopped clock, he's right twice a day. Unfortunately, he was wrong for about 10 straight years.
He was in 1980 for quite a while.
Yeah,
it was fantastic in the 70s.
Yeah. But he did have one kind of interesting comment one time that I've found to be true, and that was that we see a lot of people in the Titanic all run to the stern of the ship. Right? It's starting to sink, so they all run to the stern. Eventually, the whole thing's going down. But normally, when you see money being chased around, it's bad, and everybody thinks they can get to the stern of the ship, and the ship's not going down. But he basically had the idea or the belief that just because everybody thinks it's safe to go to the back doesn't mean the ship ain't going down. That money will kind of flow around before everything does a crack. And I kind of, I've seen that enough over the last, almost 15 years. 15 years in October it will be, of trading full-time, that we are looking at a market that has incredible brittleness. And it could, it's going to be something, probably maybe even something I haven't even thought of, that'll come out of the blue, and that'll be enough. But to me, it would be downgraded the debt, or the U.S. debt like the UK and Germany's already had, and just a slightly higher interest rate starting to scare people out. I think right now we've seen a lot of the housing market really push on these low rates, and as soon as they start ticking up a little bit, I think that those are going to come back in a great deal also. I think the house, when we look at, you were talking about Coca-Cola and those, how about all the housing stocks that have severely pulled back here?
They've had a tremendous pullback. Of course, they had very big gains on a percentage basis, not from the top, but from the bottom, and they are pulling back, and that was a concern of mine just about 2 weeks ago. I had one question for you. GIS is General Mills. Do you do the same on the weekly and the daily, weekly and monthly? Because I know you use your Power Vector indicator. You do it on dailies all the time. Well,
I pretty much do it on dailies because I want to know the absolute bottom to the absolute top.
Right, okay.
And what happens if you had your absolute bottom on Friday, but included Monday, Tuesday, Wednesday, and Thursday? So if I really want to get in for individual volume during a week, that's one thing. But what I want to see is really just how much volume there was and how much energy at the swing points and how much between those movements, and then compare them to movements that come subsequent to that. What you had in General Mills was a nice hard move down from the May 20th, 2011 high to the August 9th low. Then you had kind of a very smaller version of that thing inside from April 3rd, 2012 down to June 27th of last year. And so you were watching the energy. If you can actually see those numbers, my Power Law Vector indicator showed 3.3 on the first leg down, and then pretty much one about the same length of time, about 2.2. We started seeing the volume come out of that. Once this thing broke out with volume, you're along for the ride. Could I expected this much out of General Mills? It had a nice consolidation, but my belief is this is nothing more, and all these stocks are nothing more than everybody running to the stern of the Titanic, and it's going down. So everybody's thinking that they want to be in these quote-unquote safe stocks. I've never, ever seen it. And every time I've seen a whole bunch of stocks at the same time topping out or bottoming out,
In the same sector.
In the same sector, there's been huge moves. Is it 2007?
Was the home builders?
Yeah, May 5th.
2005, it was the oil and the, yeah.
Yeah, in the house. But if you go back and look at every one of the broker-dealers on May 5th of 2007, you'll see every single one of them is retesting a major previous high on 50% volume. It's not just one or two or three of the stocks that are, I mean, just every single one of them was in there, including Lehman Brothers. Were all in there testing previous highs on about 50% of the volume. The stocks that I made, I made some decent money there. The money I made in huge money was also the March 2009 lows when you looked at, I had a couple of the energy sector out there, CSIQ and AWPR. And there was a couple other ones. I had stocks that I bought that were testing previous lows on 10% of the volume that they previously had. In fact, CSIQ is a really good example to buy a stock on extremely light volume.
So that was where the selling had just, anyone who had sold had already sold. It was just going down because the market was dragging it down.
Right, but that low was the first one that I really worked on my theory, which was I wanted to find the stocks with incredibly light volume. Normally, it's hard to find stocks with maybe about 50% of the volume, and at that point, I was buying stocks that had 20 and 10%. The first time I saw that and made a bunch of money off one on incredibly light volume was Sears when they went together with Kmart and had the Sears low holdings. I don't know if you can separate the chart to go back, but that 2003 spring low, I think, right around 20, I still remember the trade like it was yesterday, because I bought just an absolute ton of calls and 20 calls, and it was printing off about $19.50, and they were selling 20 calls for $1, and I had 40 for 45 days, and I think the thing went to like 27. And it was, but if you could go back and find that, there's another one that was testing 100 million shares, I think, with like 10 million shares. So if you can get those big turns in the market and find these stocks with incredibly light volume, they're almost always monster signals, and that's why I'm concerned about higher interest rates when I see both things like housing starting to pull back. I'm thinking that maybe it doesn't. I'm not thinking that the interest rates go up monstrously, but I think they take up to take the froth out of the market, and I think the housing stocks are already telling us that, and we're probably going to see the same thing in these quote safety stocks where everybody's borrowed money to get the 3, 4, 5% yield. I think these things are probably going to come right back down fairly quickly.
All right, well, that's very interesting, and I love when you were putting your chart together, showing me the GIS, the General Mills. It happened the day it happened. Each time you show the lows with your trend line coming down, it was going right to the 200-period moving average, and that was the kickoff point every time. So I love when you can put different techniques together. Yeah.
Yes, certainly. Well, I certainly like your 9-day technique. The best of, I'm not much on using moving averages, but I've always loved the Joe DiNapoli 3x3 displaced moving average, and really always like the your 9-day moving average for his what is it, traditional day?
It does. They're quite close. I happen to like the 9 EMA a little bit more because it smooths it out a little bit. It's not quite. My eye tells me that it's not quite as whippy, so that I at least you get used to your own indicators.
Yeah, I mean they are close, but the one I always love that works just about as well with 9 days is the 3x3 repo. Is double repo thing where you have 10 to 15 days up. 2 to 5 days, maybe down, 2 to 5 days over that, and then a close back below that once again.
Right, and that second time down, it closes underneath, especially if it takes out the left side low.
Right,
tells you that that's a very serious decline.
Right, and you've got basically a great pattern out here, and I suspect that when we see the double repo in these stocks, we're going to see the same thing, that they're just going to fall apart, and it's all going to be as either money starts to get pulled back and the Fed starts, quote, quote, throttling the amount of money, which is the exact statement that they are saying about how this market's, what they're going to do with this market.
Right.
But I think they already know that they've got some issues out here with $4 trillion on their balance sheet already, and little to show for it other than a market that, to me, looks awful frothy.
Well, I appreciate all that information.
Well, I appreciate your call. Call in anytime. I'm always interested in talking to a liger like you. The lion and the tiger of Tiger TV. Thanks very much, Basil.
Have a great weekend.
You too.
Thank you. Bye.
And as we look at this market each and every day, I want to be watching what kind of volume we have coming in here. 1551, like I said, this market is all set up to expire at about 1550 today. We got 2.5 billion shares. A lot of this is going to be exactly because of options expiration. I'm seeing a lot of the stocks that I'm short in that they're trying to push very close to the expiration pivot point to wipe out as many of the options. We look at GLD coming in at 135 and a nickel. I mean, you're probably going to, I probably can go through just a ton of these that are coming back in. Apple looks like, I think they're going to try to push this in to 395. It looks like all day long. That's where they're trying to push it. Google, I bet, probably closes within $800 and probably 50 cents either way. Really trying to take off some of the puts on Microsoft and trying to get it up to $30. I don't think they're going to be able to get that much out of it, but going to be an interesting. Again, there's plenty of time here. One more segment. You can give me a call. Be like Basil and give me a call at 877-927-6648, and we'd love to have you call or talk about what's going on. We've got some stocks out here that are getting ready for a big decision point. One of those is Akamai Technologies. This thing gapped down on monstrous volume. It's coming back down to that previous gap down of February 7th. When it came down with 27 million shares and just blew apart. You had your automatic rally out of it, which is a rally that Wyckoff called a rally with no preparation. It just happens. And since you really don't have any real gauge on it, you don't know what's going to happen. After that rally, you start getting a lot more information. We are pulling back into those lows where it gapped up before. That gap happened on June 26th of last year on 13.8 million shares. So you actually broke into that with 27 million shares on February 7th. We knew this was going to come back and get the retest, and we're back in there now. And I think this is one of these charts that's going to go with the general direction of the market, but at higher levels of support. Azurian Mines, AZK, another one, took off with monstrous volume on the 14th of January. This thing has been doing not too bad out here. It's coming back and filling its gap. It's doing exactly what it should on a lighter volume out here. So if I'm wrong out here, there is a very interesting, there are some interesting charts starting to at least show up. Not everything is bleak. But we'll be back and look at a few more of these before the end of the show.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And wow, Polar Spy. What's that? It's right at 1550. Is that what we're looking at here? I didn't. Let me pull it back up here in just a second. 1552, yep. It's amazing how sometimes numbers work out. We were talking, you can give me a call still. We got a few minutes left, 877-927-6648. And be a liker like Basil. Anyway, I was talking about that 3x3 displaced moving average and the double repo pattern from Joe DiNapoli. I'm just because IBM is a good example, I'm going to just go through it real quick before the end of the show, because we're talking about how do you make these plays on stocks that go ballistic, and this is one of the ways that I found that actually tends to keep you out of trouble. I wanted to play this, but didn't give me enough going into earnings, and the options were basically too expensive. But you want 10 to 15 days above the 9-day or 3x3 displaced moving average. And we certainly have that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, exactly. Then you're going to get somewhere between 2 and 5 days below it. This case, we got 4, a couple of days above it. And then you go ahead and place your trade. Now, sometimes it's a little early like this, but your stop probably would have been a close above 215, and you would have been in at 212. Not bad for a $210 stock to get in there with such a light move out here. But this is pretty much how they play out, and that is a couple days below, you get kind of an anemic bounce that does not test the previous high, and then a close back below it. And that ability to see and test previous highs, in this case, we should have seen huge amounts of volume, a sign of strength, and we didn't get it in IBM. That was the kind of like the dog that didn't bark in the Sherlock Holmes. You can infer that the dog knew the killer, and he came in because the dog sat there and didn't do anything, didn't bark. We can infer, since there was no sign of strength in this, that we were seeing a lot of movement. In fact, I've been talking about IBM for the last couple of days, in that most of what they were doing was all on the cost-cutting side. A lot of their business growth was not anywhere to be found, and pretty much over the last 6 to 9 months, that all of their upside had pretty much been on replacing employees that cost them $100,000 here in the United States by ones that cost them $25,000 in India. And that is their plan for some time. If you go back and do a Google search, you'll find out. In fact, I brought it up on the Tech Insider Hour with Tom O'Brien, I think a year ago in February. So maybe it's been a year and a half. But their whole battle plan leaked about what they were planning to do. So there's nothing new in this, or nothing that was absolutely wasn't known. But I think they were setting this company up to distribute it, and distribute it in a big way. So what do we have out here? Let me turn that off. FLIR. Of course, this is one that took off even against the sequester, but not too bad. It's coming back to its gap, but this thing took off like a rocket on what was the low, about 23.56. We are down below that, and that day came in with 3 million shares. We're back into it today, making a little hammer candle out here with 1.1 million shares. I don't think the market's really good, but if I'm wrong, there's plenty of stocks out here, and we need to be looking at them right now. I suspect maybe a little bit more of a bounce on Monday, and maybe a little pullback, and then we're going to see what happens. Anyway, see you, same bat channel, same bat time, Monday. And on the Tom O'Brien Show. See you then.